friends, welcome to my YouTube channel Tax Money. In this video we are going to discuss new tax rates introduced by Union Budget 2020 by introduction of new section 115 BAC. According to the proposed provisions, now the individual and HUF has the option to either avail the new tax rates as incorporated under section 115 BAC or he may calculate his tax rates according to the earlier provisions as available to him under the Income Tax Act. So according to the new provisions, what are the tax rates as per the different slabs of income? For income up to 2,50,000, tax rate is nil. From 2,50,000 to 5 lakh, it is 5%. From 5 lakh to 7,50,000, it is 10%. From 7,50,000 to 10 lakh, it is 15%. From 10 lakh to 12 lakh 50,000, it is 20%. From 12 lakh 50,000 to 12 lakh 50,000 to 15 lakh, it is 25%. And above 15 lakh, it is 30% of the taxable income. So what are the conditions for availing these reduced tax rates? There are various conditions attached to this section. According to this section, the assessee cannot avail any exemption or deduction except a few as provided under the this section. So as per this section, you cannot avail leave travel concession as specified under section 10(5), house rent allowance as allowed under section 10(13)(a). This is the most common exemption availed by the salaried clerk person. Now the next, some of the allowances under section 10(14), allowances to MP MLAs under section 10(17), allowances for income of minor under section 10(32), exemption for SCZ unit contained in section 10AA, standard deduction of Rs 50 lakh, deduction for entertainment allowance and employment or professional tax as contained in section 16, interest under section 24 in respect of self-occupied property or vacant property. Further, loss under the head income from house property in respect of rented house cannot be set off against any other head and would be allowed to be carried forward as per the law. Additional depreciation for new machinery as allowable under section 32. Deductions under the head profit and gains from business or profession like 32AD, 33AB, 33ABA, 35AD, section 35CCC, various deduction for donation or expenditure on scientific research, deductions for family pension under clause 2A of section 57, any other deduction under chapter 6A except deduction under section 2 of section 80 CCD and section 80 JJAA for new employees employed by any business entity, which is allowable for 30% of their salary for 3 consecutive assessment years. In addition to this, the assessee cannot adjust the brought forward losses or unobserved depreciation from earlier assessment years. So under this section, if you have losses or unobserved depreciation from earlier years, you are not allowed to adjust the same from your taxable income and you have to forego the same. Further, any other exemption, deduction or allowances by whatever name called cannot be adjusted except the fews allowed under this section. Further, where an individual or HUF do not have any income from business, that is, he has income from salary and other sources, he can avail this option as per his choice for any assessment year. So in case of assessee having no business income, he can avail this option in his income tax return, and there is no need to file any form before availing this option. So in case of individual and HUF having business income, they can avail this option. However, they are not allowed to withdraw this option for any subsequent assessment years. So if they have opted for this section, they are allowed only once to exit this scheme, and they can re-enter only if they have income not including income from business or profession. So for an assessee having business income, they cannot choose this option as per their wish. If they have chosen this option, they are allowed to withdraw only once. So these assessees are required to file a form before filing their return of income. Now we will discuss how this option is beneficial to a person or not. In this table, we have taken various cases and calculated tax as per old scheme, as per new scheme, and saving to the assessee. So in case there is no deduction, exemption, or there is no housing loss, in case assessee having income of rupees 7,50,000, there will be saving of rupees 25,000. 10 lakh, he would be saving 37,500. If the income is 12,50,000, he would be saving 62,500. If he is having income 15 lakh rupees, he will be saving 75,000 rupees. So in case there is deduction, exemption, and housing loss up to rupees 1,50,000, then in those cases, if he is having income 7,50,000, there will be net loss of rupees 5,000. If income equal to 10 lakh rupees, there will be saving of rupees 7,500. If income is equal to 12,50,000, there will be saving of rupees 17,500. If income is equal to 15 lakh, there will be saving of rupees 30,000. So if the assessee is having deduction, exemption, or housing loss up to rupees 2,50,000, in case of 7,50,000, there will be loss of rupees 37,500. If the income is rupees 10 lakh, there will be loss of rupees 12,500. If the income is rupees 12,50,000, there will be loss of rupees 12,500. And in case of 15 lakh, there will be no loss. So if you have higher deductions or exemption or housing loss, there is no use of opting these provisions. Further, if the conditions specified in this section are not fulfilled by the individual or HUF, he will not be entitled to the lower tax rates as specified under these sections, and normal provisions will apply to the assessee. So friends, you know whether these provisions are beneficial for you or not, and you can decide accordingly. So friends, if you have any queries or suggestions, you can mention the same in the comment box. I hope you like my video. Please subscribe to my YouTube channel Tax Money and keep watching my videos. Thank you.